The professional's edge and execution. So you've got the strategy, the structure, and the math down. That's a great start. But let's be real for a second. Without a repeatable process, you don't have a business. You have a hobby. In this final episode, we're bridging the gap between analyzing charts and actually turning a profit. It's time to build your professional edge and really master your execution. The playbook method. Professional traders don't trade every movement. They trade their playbook. First, you need to define your strike zone. Pick 2 or 3 specific setups, like a liquidity sweep followed by a change of character. If the market isn't in your zone, your hands are off the keyboard. Next, learn to grade your trades. An A+ setup checks every single rule, so you give it your full risk, usually around 1%. But a B-grade setup? That only deserves half the risk. Finally, look for confluence. The more reasons you have, the higher your probability. For example, fair value gap aligning with an order block and a round number. The daily routine. Let's talk about your daily routine, because the trading day is usually one before the opening bell even rings. Step 1. Start with the economic calendar. We're looking for high-impact red folder news like CPI or FOMC. We don't risk capital during these events. We wait to see how the market reacts. Next, determine your daily bias. Zoom out to the higher time frames and ask yourself if the market is generally bullish or bearish. It's always easier to trade with the tide. From there, map out your session. Highlight your liquidity pools, like the previous day's high and low. And finally, the post-mortem. When the day is done, look over your journal and ask yourself just one question. Did I follow my rules? If you did, it was a good trade, regardless of whether it was a win or a loss. The psychology of the apex. The hardest part of trading isn't reading the charts. It's managing your own emotions. To really succeed, you have to practice the law of detachment. Once you're in a trade, you need to let go of the money emotionally. You've done the analysis, so just let the probabilities play out. Avoiding overtrading. Taking more trades doesn't necessarily mean making more profit. In fact, sometimes the best trade of the day is the one you decide not to take. Now, you've moved from retail patterns to institutional mechanics. You now understand liquidity, market structure, risk management, and execution. The strategy is clear, the risk is managed, and the edge is yours. Now, the only question left is, will you follow your own rules? Because the market rewards one thing above all else: professionals.